Good morning, Francois. How are you this morning?
Good morning. I'm fine, and you?
Very good. Will the Fed do the right thing in 2024? That's the big question. What are your thoughts on this?
First of all, what does it mean? What does it mean? Does the Fed do what it needs this year? Does it mean that they make the market happy because they are going to cut rates very significantly, or do they do their job properly, which means assess the situation with regard to inflation development and growth development? That's a very good question. I don't think that you can answer it very easily.
So, but basically, do you think the Fed is going to be dropping the rates as fast or maybe a little bit slower? But certainly, do you think the Fed is going to be responding to some extent to the market's request in terms of a drop in interest rates?
They will. I think that they will lower interest rates. There is, to my point of view, considering the evolution of the inflation numbers in the US, which should be confirmed on the downside or stable in the numbers that are going to be published this week, and considering the fact that economic activity should slow down in 2024, they have room to lower interest rates, and they will respond, but only partially to market expectation. I believe that the market was much ahead of itself by the end of last year, considering that it was nearly 100% done deal that they would cut rates in March. I still defend the idea that they will begin cutting in June, and that so the market is going to a certain extent be disappointed by the fact that the lowering in interest rates is going to be slower than expected, and I don't see the amount of rate cuts to be as high as market expected. So market should be ready for some kind of disappointment in terms of where the monetary policy is heading. It's heading south, lower rates, but are slower and less than expected by the market.
The CPI, especially the core, is relatively benign. It's expected at 0.3 this Thursday. That's surely enough to confirm what the market expects, that the Fed is getting very close to its target. Don't you think?
Yes, but you need to be careful because it's not one number that makes a decision for a central bank. For a central bank, they need to have, and clearly when you listen to some Fed members, they are all recounting the fact that inflation is going the right way. But is it on a sustainable downward path? That's what they want to see. And what would be a catastrophe for the Fed is that if suddenly they declare that the war against inflation because of core number is won, and that suddenly you add again some pickup in inflation, because then they would lose again credibility. So it's not one number, it's a trend, and they want to make sure that this trend is going to be sustainable. And to my point of view, they need a few more months, and that's the reason why I don't believe they will cut in March.
We're expecting a 10-year auction on Wednesday, I think it is, tomorrow. Do you think some of the auctions, there'll be a lot of them this year, do you think some of those auctions there's room for disappointment in some of the results, and could that spoil the party and prevent long-term rates from going down?
That's a risk. You are perfectly right. This is a big risk because the amount of money that the American government needs to borrow is significant. Nevertheless, what is interesting since the minute of the Fed is that you have some members. You have the beginning of a conversation about the fact that maybe the Fed could stop the quantitative tightening, and it's going to be a key issue. For the time being, markets expect that the quantitative tightening could continue, or there could be a kind of change in the quantitative tightening by the end of this year. You have now some people in the market that believe that with what happens concerning the Fed policy orientation given by Powell and the minutes, maybe the process of stopping or reducing quantitative tightening could begin in June. And that would be significant because it would allow the Fed to reinvest again, and you will see the balance sheet, the Fed's balance sheet, grow again. So very interesting debate. And this is the reason why also I still consider that in terms of market development, we could have a first half of the year that is going to be quote unquote difficult, volatile, because now you have all these elements: speed of the monetary policy, extent of monetary loosening, quantitative tightening, all those elements of the monetary policy are going to be with us in the coming months and feed into volatility, to my point of view.
Consumer credit was released yesterday for November. It came up much, much higher than expected at 24 billion. Is that something that could have an effect on market sentiment and therefore long-term rates as well?
Yes. First of all, you can see the positive side. If you have credit, it means that the consumer feel confident enough to consume, which is what you want to see because you want to have this soft landing scenario materializing. And the key element in this scenario is the fact that the consumer needs to remain strong to support economic activity in this phase. There is the negative element, is that it's credit. It's a lot of money that is borrowed, and it means that borrowing too much is also dangerous for the economy. It's dangerous because there is the effect of leverage. There is the risk that suddenly you have you have a kind of disconnect at one point, and suddenly consumer realize that they need to refrain from consuming because it was too much on credit. So this is a risk. So yes, it will have an impact on the economy. It's important. Yes, the market can react to those kind of numbers, especially if you consider that the soft landing scenario is completely considered as what is going to happen in 2024. In a scenario where the consumer remains strong, it means that inflation maybe is not going to fall that fast, and it means that it can have consequences on long-term interest rates.
Coming to stocks now, 2023 was a terrible year for the people who were benchmarking to, for instance, the S&P 500. Most of those stocks underperformed their own index. Is 2024? Do we have to go all in again on high tech and Magnificent Seven, especially after what happened yesterday with Nvidia? Coming to banks now, it's the start of earnings season on Friday. Are you expecting any kind of statements, any surprises? Talking of bank loans, let's go to China now. Zhongji, it was completely expected, but they filed for bankruptcy last week, late last Friday. Do you think there are any others in the cupboard that are going to be coming out? Is this going to be a big feature for the Chinese market for 2024? Coming back to stocks now, first week of the year has been pretty disappointing. According to various theories, that points to the rest of the year. What's your thoughts on that? Francois, I think that's all we have time for today. Thank you very much indeed. See you next week. Bye bye.